Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I'm going to talk the US election, I'm going to talk the Fed, I'm going to talk about the Bank of England rate cut that we're expecting tomorrow. There's a lot that's happened, but actually, it's kind of getting to a good point now because the markets have been reacting badly recently, especially the swap rate, the rate that the banks borrow at. That's been increasing because of uncertainty. Now we've got a result in the election in the US. We've got the Fed and the Bank of England meeting tomorrow. A lot of that stuff's now behind us. Whatever we think of the results, whether we're happy or unhappy, that's irrelevant. The markets don't act on that stuff. They will act on what they feel going forward will happen. And so that, in a nutshell, is better. We want certainty in a market, and that will give us the ability to understand where interest rates are going to end up and ultimately if they're going to go up or down. So let's talk about tomorrow's Bank of England meeting. But before we jump into this, as ever, if you haven't done already, do subscribe to the channel over there and hit that bell notification. We've got new content on interest rates, house prices, investing in property, and much more every single day. And while you're here, smash like, tickle like. Today you might smash that like out of anger or happiness, depending on what you think happened in the US election. Well, first off, I was wrong, wasn't I? I said for weeks, I felt Kamala Harris was going to win. I just felt that the polls, from what I'd been watching, the Republicans did have a lot of polls that were there to potentially suppress the vote. And I just thought that she was getting massively underestimated. And that didn't happen. In fact, the votes that she got were about 20 million less than Biden got. So clearly the Americans had had enough and they wanted change, similar to what happened over in the UK and has happened often around the world recently since we've had this inflationary pressure. So the Bank of England and the Federal Reserve, they have their meetings tomorrow. The Federal Reserve one's going to be interesting because I think Jerome Powell is going to get fired quite soon after January the 20th when Trump takes office. You see, they've had a contentious relationship. Trump wants more power over the Fed, and I think he's going to push Jerome Powell potentially out of that job. So the Fed, they've got to try and put that aside. Their job is to make sure that inflation is under control. It's actually at around about 2% now in the US as well. We've got the UK inflation at under 2% at 1.7%. And now they know what they're dealing with. They know who their president's going to be. They expect what the policies are going to be, so they can start making decisions accordingly for that. I think the Federal Reserve are still going to cut tomorrow. I think it's going to be less than we'd hoped for. Initially, what would normally happen is the first cut would be an indication of the next few cuts. So if you cut 0.5%, you would normally go 0.5%, 0.5%, 0.5%, maybe 2 or 3 times, and then adjust and see what that did to the economy. But I think the Federal Reserve, as I said yesterday, is going to slow down the rate of interest rate cuts. And I think they're going to bring it down at around 0.25%. Now, that means the Bank of England get the ability to not need to cut by 0.5%. So the Bank of England has their meeting as well. They're going first. I don't know why it's this way around, because normally they go second. Normally the Federal Reserve would do it, say, like on a Wednesday. Bank of England would have their meeting on a Thursday. But that's not happening this time. And so the Bank of England will be going first. I think they're going to cut 0.25%. That's what the markets are expecting as well. And I think that's what you're going to see is just a gradual decline in mortgage rates, interest rates, as the economy just starts to recover from this inflationary pressure that we've had. So what else is going on? Well, swap rates, they're not really budging at the moment. They've went up. And interestingly, no lender that I've seen so far today, not one. If you can tell me one, maybe I missed it. I'd be all ears on that. But so far, no lender has cut leading into this Bank of England meeting. Now, that could be for 2 reasons. When they often cut prior to the meeting, it's because they want to get the headlines, right? So if you think of it from a marketing side of things, if you're NatWest and you cut your rate prior to the Bank of England meeting, you're going to get the news cycle today, right? You're going to get the news cycle today, and that's good. And that's free advertising, which is, of course, is what they want. And that's why some people will do it ahead. Some people will wait till the cut has happened and then they let the dust settle. They leave it for a few days because they don't want to get caught up in the articles with the Bank of England stuff. So they'll wait a couple of days, then they'll cut, then they'll get the headlines and the advertising. It's a marketing game here, guys. But what could be happening, I'm not sure, it could be that there's so much press today about Donald Trump. If you were to be a lender and you were to cut your rates today, it might not even get picked up by the media because no one's looking for that type of content today. Everyone's looking to see what's happening in America. That's what all the clicks and all the attention is going to be on for the next day or so. In fact, the Federal Reserve meeting might even go under the radar. Obviously, it's going to happen. The rates will probably be cut, but it might not be something that even gets mentioned on Fox News and CNN and those likes in America because there's so much more interesting news that people are glued to at the moment. So, yeah, what I think is going to happen is you're going to see 0.25%, and I don't think that you're going to see many mortgage rate cuts. Now, you might get a video from me tomorrow or Thursday, or what day tomorrow? Thursday is tomorrow. You might get a video on Friday with some lenders that have cut rates, but I don't think it's going to be a lot of them. I think it will be a couple that have already maybe got a higher rate and they want to basically get some more market share. So it'll be that reason alone that they'll be cutting, not because the swap rate has dropped. So I think between now and Christmas, you're not going to see a lot happening with mortgage rates. You're going to see the base rate cut tomorrow. You're going to see the base rate cut again in December. And those people that are on tracker rates, they're going to see the real benefits of that straight away. That's really positive for them. Those rates are going to start going down immediately. So if you're on a tracker rate, your payment will go down. Next month's payment will be a lot cheaper than it is this month, and that will happen again. And so those types of products will benefit greatly from this. I've already done a video actually, so do go and check out. If you go and search on the channel for tracker, I've done a video about should you consider a tracker mortgage now. For the last few years, definitely not, but now might be a time to consider the tracker because the rates will go down as the base rate goes down, and the mortgage rates, the other rates, the fixed rates, they might not go down as quickly as what we would like. So it'll be interesting to see how that works out. Anyway, let me know your thoughts. What do you think they're going to cut tomorrow? Do comment below. Do smash like. Do subscribe. Check out all the other content on my channel, including this video right here.